Hello, my name is Jumanelli, and for today I'm going to be taking you through accounting for non-for-profit making organization. And before I begin off, I'm going to require you to subscribe to the channel. It will bring you some good luck in your forthcoming exams. So I'm going to show you the basics briefly, and then most of the stuff you'll go practice more for perfection. So with this, these are some organizations established with an objective other than profit making. They may include schools, clubs, hospitals, and also NGOs, etc. So these organizations keep accounts different from those kept by profit making organizations. So the differences lie in the following. A cash book a cash book is replaced by receipts and payments accounts, but it is maintained in the same way. That is for both the cash and bank. So you will be having a format of the receipts and payments account then you have the receipts on the debit side and the payments on the credit side. So that's how it will look like, but it's maintained the same way as you may maintain the cash book account. So moving on, we are having the statement of profit or loss account, which is replaced by the income and the expenditure account. Now for the income statement, it is replaced by the income and expenditure account. So if I told you to draft it, you have your title, then the income and expenditure account, then for the period ended 31st 12, then a particular year. So with the incomes, you'll get to have your incomes, then you list them with the expenditures. Then when it comes to you getting a net profit, you won't call it net profit, it will be the excess of income over expenditure. And for the net loss, if it's a net loss, it will be the excess of expenditure over income. So when it comes to the capital is replaced with, you don't call it capital, you call it accumulated funds. And I had already looked at the net profit when you are dealing with the non-for-profit making. We don't call it net profit, we call it the income, we call it the excess of income over expenditure. And when it comes to net loss, we call it the excess of expenditure over income. So having known that, some of the major records kept by non-for-profit making organization, we are having the receipts and payment account. So they get to keep the following record, that is the receipts and payment account. So for this summarizes the cash and bank transactions for the period. So in the receipts and payment account, you're going to find there, it includes the opening balances, that is for the bank and the cash, and it records the receipts of the period, and then it also records the payments for the period. Then it also records the closing balances, that is both bank and cash. Then we get to have another record they get to another account they get to record, which is the income and expenditure account, which is like the income statement on their side. So this account is presented in the same way as the profit or loss account for a service organization. So the costs or expenditures are matched against incomes. So with this, however, in this account, profit is termed as excess of income over expenditure, and vice versa for loss. We already looked at this. Then we get to look at another account which is being recorded by a not-for-profit making organizations, which is the bar trading account. So how does this bar trading account come about? So some not-for-profit making organizations, such as the clubs, the schools, operate bars where members go for refreshments or recreation. So this can generate a profit or loss during a given period of time. So this profit or loss from this bar should be posted to the income and expenditure account as an internal source of income. I already told you this income and expenditure is like your income statement. So once you get a net profit or a net loss, you will come and drop it in this income and expenditure account as your internal source. So from the bar is not disturbed. Profit from the bar is not distributed to the members, but it is put back to finance the organization's activities. So clubs maintain their accounts in single entry form. As a result, some records can get to be missing. So therefore here it may be necessary to prepare some control accounts to determine the bar purchases and then the sales and to add just some expense accounts. So they can also get to draw or draft control accounts in order to determine certain items. It can be accumulated depreciation or anything. So here we can look at accumulated depreciation, and here they are saying there are cases where in the question the figure of accumulated depreciation is missing. So since they are preparing their records, since they get to determine their records in single entry form, so some figures can tend to miss, and we are looking at accumulated depreciation. In this case, some are missing. And so if you're told if it is missing, to arrive at this figure, if you want to get that figure, the statement of affairs has to be prepared summarizing the assets and liabilities of the organization. So you will need to draft the statement of affairs. And the statement of affairs, when you look here below, the statement of affairs is the opening balance sheet. So all assets and liabilities as at first, there will be your statement of affairs. They will comprise of the statement of affairs. So if at all you want to get it, you say accumulated depreciation is equal to assets minus liability. That is of as at first over that particular year, and then you'll be able to get your accumulated depreciation. So here is an illustration of a bar trading account. You can have your sales, less cost of sales, you're having opening stock, add purchases, less closing stock, and then you get your gross profit. Then from this gross profit, you less operating expenses, then you have your electricity. You can have your electricity. Then after that, when you less gross profit minus operating expenses, or if at all you're having some other incomes, you can add them here, and then you less the operating expenses, and then you get a net profit or bar net loss. So when you get a net profit or bar net loss, you'd have to take it to the income and expenditure account. So with this income and expenditure account, if I told you have drafted it under incomes, if I told you having a profit, you will say bar net profit. And under expenditure, if I told you having a net loss, you come and say bar net loss, if I told you have gotten any. So having known that, we go to the balance sheet, which is the statement of financial position. So for a not profit making organization, the balance sheet is not any different from the statement of financial position prepared by any business, except for the renaming of, that is the capital, and the profit or loss. So everything is the same. So I had come and I had showed you here that for the balance sheet, the rest are the same. But under equity, when it comes to the part of equity, when you say assets, and then you go to total assets, then you come to equity. When you come to this part of equity, it will be like capital is replaced by accumulated fund. So you want to call it capital, you say accumulated fund. And when it comes to to putting there a net profit, you say excess of incomes over excess of expenditures. Then when it comes to net loss, you will say excess of expenditure over income. So having known that, we go to the subscriptions. So with subscriptions, what do they mean? Subscriptions from members are the major source of income for non-for-profit making organizations. So subscriptions here can be or ordinary or life subscriptions. So let's go into the understanding of subscriptions. So accounting treatment relating to subscriptions. What happens? We're having subscriptions due or or in arrears. All these are current assets. You can call them subscriptions due or accruing or in arrears. They get to be current assets. It will mean that the organization is demanding the members. So we have been subscriptions received in advance or prepared those ones, they get to be current liabilities. It will mean members will be at a certain point demanding the organization. So when we look at subscriptions taken as income for a particular year, they should exclude subscriptions received in arrears and also subscriptions received in advance. So if I told you to consider them as subscriptions taken as income for a particular year, they must exclude the ones received in arrears and the one received in advance. So this requires opening up a subscription account similar to this one below. So we can get to see it here. We are having a format whereby we're having subscription account, and with this subscription account for the format, we get to have a debit side and a credit side. So having known that, when we are having subscriptions in arrears as an opening balance, it will be subscriptions in arrears brought forward, which is an asset, and with an asset it gets to have carried down, which is on the negative side. So it will be subscriptions in arrears carried down. And then when it comes to liabilities, subscriptions prepaid brought forward, which is a liability, meaning that with the subscriptions prepaid or prepaid which are being brought forward, it's a liability, and it will have subscriptions prepaid carried down on the debit side. So this is it. This one will be subscriptions prepaid, a liability, subscriptions in arrears as an asset. So when we are having payments during the year, it will be receipts and payments account, which we get to put here. Now the balancing figure here is going to be an income and expenditure account, which is this. And after doing that, you just add up the total and they will equal. The debit side will equal the credit side. So having known that, because with this figure, this is the figure you take to the income and expenditure account, this balancing figure. So having known that, so we can get to have an example here. The following information is taken from Westwood Limited for the year ended 31st December, and they're telling us 1st January 1996 subscriptions due were 200,000, and 1st January 1996 subscriptions were subscriptions in advance were 300,000, and then subscriptions received during the year ending 31st December 1996, they were 2 million. Then 31st December 1996 subscriptions due were 450,000, and then 31st December 1996 subscriptions in advance were 280,000. So they're telling you determine the amount to be taken to the income and expenditure account. So what you get to do, you get to know you get to draft the T account for subscriptions account, and then you say subscriptions in advance brought forward, that is at the beginning, will be 300,000 from here, and then you get to know you are also having subscriptions due, which is 200 brought forward, which is 200,000. It is at the beginning. So you can have both of these on the same account, on the same T account, or you can have one of them depending on what the question has given. So with this, you get to know what else happened. Then they get to tell you that subscriptions received during the year were 2 million. So you come and record on the credit side of the subscription account receipts and payment of 2 million, and then after that you get to know what was the closing balance. The closing balance for subscription due at the end was 450,000, and for in advance was 280. So you get to come for subscriptions due, it was was having a carried down of 450,000, and then for paid in advance, when you come this side, you was having a balance carried down of 280,000. So when you add this side, you realize this credit side is bigger, which gives you 2,750,000. Then you do the same, you balance this figure. So when you add the subscriptions you brought forward, the 200,000 plus the 280,000, the total you get, you minus it with this figure here, which is the 2,750,000. Then the difference you get is this, which will be the balancing figure. And then you will get this income and expenditure account. I mean, this amount, you take it to the income and expenditure account. So therefore, you can say 2,270,000 is the amount of income to be taken to the income and expenditure. So a student can ask him or herself, why is the subscription account credited with the receipts and payment account? Remember, the receipts and payment account, we treat it the same way as we would treat cash and bank. What is the double entry here? What you're going to do is you debit if at all they pay for subscription, you're going to debit the receipts and payment, like this subscription account 2 million, and then you're going to credit subscription account with 2 million. That is after having adjusted here that you show that they had paid for subscription. Then you just get to drop the corresponding side on the which is the credit side of this, and you say subscription account receipts and payment 2 million. So that's why they get to put 2 million this side on the credit side. So having known that, we are having also life insurance. So with life insurance, in some clubs, members are allowed to become life members by paying life subscription, which allows them to access the club facilities for the rest of their life. So what is the entry when life insurance is paid? So you're going to debit the receipt and payment account, let's say maybe 10 million, and you credit the life insurance subscription account with 10 million. Now this amount is usually in large sums, so with life insurance you cannot record the whole of the 10 million in the income and expenditure account. So usually they get to pay it in a certain portion. So here I try to demonstrate how it will look like. The receipt and payment on the debit side, put the life subscription 10 million. When it comes to life insurance, which we usually look at, we don't usually look at this one, but we look at this one, whereby receipts and payment of 10 million. So here instructions are given on how it must be taken to the income and expenditure account at the end of the year. So normally they get to use 1 out of 10 of the amount received. So they transfer it to the income and expenditure account at the end of the year. So they normally take 1 out of 10. So the entry for transferring this agreed amount is, so once you're having your 1 out of 10 and you know that your life subscription is 10 million, it will give you 1M. So assuming you're having 1M, so what they do is to debit the life insurance account and then credit the income and expenditure account. So it will be 1M, 1M. And here I have an illustration for you. I already told you they get to only deal with like the life subscription account. They don't usually look at the receipts and payment. So it will just be at the back of your mind. Once you're having this and they've paid 10 million, you just come and say receipts and payment, which was paid 10 million on the credit side. I already showed you how it comes about from here. From this step here, I already showed how 10 million comes about on the credit side. And then remember you had taken 1 out of 10 of the 10 million, which is 1 million. So once you debit the life insurance, you're going to credit the income and expenditure account. So you come on the corresponding side and you put there 1 million. This is the 1 million. So having done that, the balancing figure will be a balance carried down, which is this. So this balance carried down of 9M, because once you add this 10, you get 10M, and this side 10M. That means to make this debit side balance, you need to the balancing figure will be a balance carried down, which is going to be 9 million. So this 9 million is what you take. This 9 million you will need, you will get to, in fact this 9 million is going to be your non-current liability. So the credit balance, this is going to be a credit balance. This 9 million is the life in the life insurance account, is a long-term liability of the club. So meaning that they have to they have to keep on reducing this liability. So the 9M is a non-current liability because it is paid in advance, thus it will keep on reducing. So they keep on reducing it by putting it under the non-current liabilities. So each year it gets to reduce. So having known that, you can be able to sample yourself with the number on accounting for profit for accounting for non-for-profit making organizations. So you can be able to handle specific numbers based on what I have given you. Remember, we have been doing some last minute reading, so make sure you subscribe to the channel so that you can get notifications for more videos like this. Thank you so much for watching.